What is up, everybody? Today is Monday, August 11th, and today I think was probably one of the best price actions that I have seen in a while. There were 4 setups according to my entry model today that appeared at 4 different macros, and they all hit at least a 1 to 1.5 risk to reward, which is what I consider a winning trade overall. So let's go into the 4-hour time frame. As you can see here, we have very bullish structure overall on the 4-hour. The target that I had today was the fill of this 4-hour FEG for a long setup. And the reason why I was bullish bias in the very beginning was because of the fact that we were delivering out of this 4-hour FEG. You can see here that we bounced, and then 6 p.m. we were starting to move on higher. So that looked like it wanted to continue moving on higher, and we know that price wants to do one of two things: either take out liquidity or fill an inefficiency, otherwise known as an imbalance. So that's why the target for me was at 23,777 level. Dropping down to the hourly time frame, same exact thinking. You could see that the structure was kind of bullish because we did put in this swing low here for 10 o'clock and started to move on higher. Or before 10 o'clock, sorry. And as you can see, we had disrespected this 1-hour bearish fair value gap right here. And at the same time, we also did sweep, it looks like, this swing low right there, also taking out that swing low right there. And overall, we are still holding this 1-hour FEG that we have right there. So overall, bullish sentiment on the hourly time frame. Same thing with the 15-minute time frame. We had a 15-minute bullish fair value gap right here. I was just looking for order flow to switch to being bullish, and as you can see, we're holding this. We're also holding this one, and we disrespect this bearish 15-minute fair value gap right here with the closure of this candle at 9:45. So coming into the 9:50 macro, pretty much everything lined up to be a bullish entry. So as you can see, this was the trade that I actually took today. There was a 1-minute bearish fair value gap that was created inside of the macro. We get the invalidation of it, and then you put your stop below the swing low and you target a 1 to 1.5. That hit really quick, or not really quick, very nicely, and then start to retrace. If you wanted to hold to the target, which was the 777 level, that did hit. You did have to experience some kind of drawdown on it. Now, coming into the second macro here, seeing as to how we did not hit the draw on liquidity yet, and overall we were still bullish, there was more than enough reason to look for a long entry here in this macro. So what do we look for? A bearish fair value gap to get invalidated inside of the macro, both created and invalidated. This was it right here. You can see price starts to retrace here, sweeping out that low. Here's a bearish fair value gap. We get the invalidation of it at the very end, the last candle of the macro, and I still count it. I still count it as inside the macro since this was what created the invalidation. And you enter in, stop below the swing low. I did not take this trade, but I did watch it happen. And as you can see, price moves on up and smashes that target. This trade was really nice because we had a very strong push up into it. Now, I did have another target of 809.50, and I wanted to see if we were going to end up getting some kind of retracement and push up into that. And as you can see, we got nothing. It was literally just a straight shot up. No bearish fair value gaps created inside the New York lunch macro, so there was no setup here. Now, coming into the New York PM session macro, why was I bearish? This one was a little trickier because of the fact that obviously on the 4-hour we were still very bullish, but we did hit an objective, and on top of that, after hitting that objective, we also did sweep these highs. Okay, if you look on the 4-hour, we have a wick above that old swing high, no body candle closures above it, signifying that this could be a potential liquidity sweep. That's when that candle was forming. Here on the hourly time frame, same exact thing, right? We're starting to get that push above, but no strong displacement candle over, and we're starting to reject out of that area. And now here is where I really came in bearish, because of the fact that here on the 15-minute time frame, we invalidate this 15-minute bullish fair value gap. So let's mark that out so you guys can see it clearly. We invalidate it here at exactly 12:45, coming into the 110 macro. We could have seen just a straight flush lower down into the low of day, or we could have potentially seen a move back up to this 15-minute fair value gap, which I would have wanted to have held and then continue moving down lower. So my plan coming into this macro was that if we did invalidate this one, then we're going to continue moving on higher, because obviously the 4 hour and the 1 hour still looked bullish. But because we were rejecting out of an area that looked like it would be a sweep on those higher time frames, and then on the 15-minute we get that change in the order flow, that's why at the New York PM macro here at 110, I was looking for a short setup. And if you guys have been rocking with my videos for a while, you will know that it is a bullish fair value gap created inside the macro, invalidating during the macro as well. And then you enter, put your stop above or below the swing high or low that gets created. This one was a 1-tick FEG, not my favorite, but still counts. And as you can see, we get the invalidation right here with the closure of this candle. Put your stop above the swing high, and you target a 1 to 1.5, and then you leave runners to, you know, your overall draw on liquidity, which could have been the low of day. That would have been a 1 to 5.5 risk to reward on your runner, and that trade would have lasted roughly half an hour. All right, not bad. That was very good. And then coming into the last hour, again, same exact thing. What are we looking for? A bearish setup. So what do we look for in it? A bullish fair value gap created, invalidated during the macro, stop loss above the swing high. What do you target? A 1 to 1.5. This one gave a 1 to 1.8, and the target on this one was the fill of this imbalance. Remember, we're either looking at liquidity or the fill of an imbalance. So conservative would be the fill of the imbalance. There's also some liquidity resting there. Obviously, price wanted to come and take out that level of liquidity right there. Right, you can see we have a swing low, which gave another 1 to 5.9 risk to reward trade. So in the PM session, we had 2 really good short setups, and then we also had 2 really good long setups in the morning. That's why I say it was a pretty good day. So hopefully you guys ended up green today, and I will catch you all tomorrow. Peace.